Hello traders, welcome back to my channel. In today's video I'm going to share with you another strategy which you can use to trade the forex market. And this strategy you can use it to trade any asset class, whether being crypto or indices or stock. No matter the asset class which you prefer to trade, you can use it to trade it. And this indicator and the strategy which we'll be explaining will work better on 1 hour time frame. That does not mean that you cannot use it on any other time frame, but we see that the optimal performance of this strategy works better on 1 hour time frame. With that being said, let's move in and see how this indicator looks like. The first indicator which we will be sharing today is our pro trading entry signal. So the pro trading entry signal indicator has a combination of moving averages being optimized to work as a trend detecting indicator. So it helps us to filter out multiple fluctuations in the market. So whenever we get a signal using this indicator, we know that we are having a clear signal of what is actually happening in the market. So this helps us to be on the right side of the market, because trading the market and being on the right side of the market is what gives us the opportunity to make money from the market. So from what you can see, when we have this indicator on the charts, you see that clearly you'll be able to know that the price is below the indicators, indicating that we are currently in a downtrend. And when you have the prices or the price coming out from the market are trading above the indicator, this gives you a clear direction that you are currently in an uptrend. So this is the biggest thing that you need to identify in every market, in every asset class which you intend to trade at any particular point in time. So having said this, the second indicator which we are going to look at is our pro trading oscillator. The pro trading oscillator is the indicator that gives us a crystal clear buy and sell signal. So whenever this indicator gives us a buy and sell signal, we see it as a clear point for us to enter the market. So when you see on this indicator, you can see here you have this red arrow pointing down. So this is the point where the indicator is giving you a sell signal. And here you have the blue arrow pointing up. This is the point where the indicator is giving you a buy signal. So how do we use this indicator? First, for you to get this indicator, just go to the description box below. There, copy the link for the two indicators, paste it on your browser. Once you paste this link on your browser, you will be able to see the button to add the indicator to your trading account. Once the indicator is added to your trading account, the next thing you do is you simply go to indicator on your TradingView account, click on the indicator, you see it on your favorites. So the indicator will be added to your favorite account. So you will see it like this. You are going to see the two indicators showing on your favorite. Click on them, then you can add them to your chart as what you have here on my chart. So once you have this, it is now the point for us to understand how to use these two indicators to formulate our strategy. So from what I've explained previously, if you look on this chart, this is a Canadian dollar against a Japanese yen. So here you have, this is a 200-day moving average, okay, and the green is 100-day exponential moving average, and the blue is a 50 exponential moving average. So when the 50 cross the 200, cross the 100, and 100 cross the 200, from this very particular point, you see that you have identified a downward trend. This is the point where you get your downward trend. So once you have this, from this point, you know that you are currently in a downward market, which means you can only take a sell signal. You don't have anything to do with the buy signal. So whenever you get a sell signal from the oscillator, this is the point to take your sell signal. We'll be taking the trade based on two different levels. When the price is below the 200 and is below the 100 and also below the 50, at this point, when we get a signal like this, what we have here, we take the signal because this meets our criteria. Price is currently trading below all the exponential moving averages. So this point, we can take our trade. And when another level again where we can take our trade is when price is below 100, which is this, but the price is above 50. Between this 50 and 100, when we get a signal and price is between this range, we can take the signal. But when price is between 200 and 100 EMA, we get a signal at this point. We will not take the signal because this signal has already breached our threshold. So any price that is trading within between 100 and 200 is not a valid market signal anymore, because it means the market is currently moving, trying to test the maximum resistance in the market. So you see at this point you have this signal here. From what you see here, you have a signal, but if you look, the price is trading here within this zone. So once the price is within this upper zone, it means we are no longer in a safe area, because if we take any trade here, there is no local point for us to put our stop loss. So this is not a valid trade. We will not take this kind of trade because it's against the rule of this strategy. But signal here you have a signal here which is within this range 150 exponential moving average. This is a valid signal for us to take. On the other way around, for a buy signal, we need to have the 50 cross the 200 and cross the 100, and 100 is above 200. Once we have the signal here generated, this gives us opportunity to only consider a buy trade, because from this region, it means price is now moving upward. And you can see that the price is trading above all the moving averages. So any signal we get from this region is a valid signal for a buy trade in that case. I hope you are following my explanation. From what I've explained, you see here you have this signal here generated on the oscillator. This is a signal telling us to sell the market. But if you look on the chart, price is currently trading above the moving averages. So this is an invalid signal. We will not take this signal for us to enter the market. Here again, you have here a signal telling you to sell the market because currently you are in a downtrend. But if you go back to the chart, you will see that price is currently above between 200 and 100 exponential moving averages. So this is not a valid signal. So you are not going to take this signal. So this is invalid. Coming back to this point, you see that here you have signal here to sell the market, and if you look here currently, you will see that here is the signal. So here is the signal. If you see, this is the candle which gives us the signal. So the candle is between 100 and 50 exponential moving average. So this is a valid signal. So once we have a clear valid signal like this, we take the trade at the close of the candle. Our stop loss is on the next exponential moving average, which is 200 in this case, because the price is between 100 and 50. So the target which we have for this is 1 to 1.5. So if here at this point we are risking 20 pips, here our target will be 30 pips. The point where if our take profit is not reached and we get an opposite signal, once we get an opposite signal at this point, we exit the market to reassess and see if trade is going to give us a new signal. Here again, you have at this point, you see from this point you have identified that you are currently moved from uptrend to downtrend, and here you get a signal to sell the market because currently you can only sell the market from this cross. So here is the candle which gives us the signal here, and if you see is below the moving averages, so it qualifies for us to take the sell trade. Once this candle closes, we open our sell trade. Because the price is below all the moving averages, the next moving average is this 100, the 50 EMA. So our stop loss will be on this 50 EMA, and our take profit is 1 to 1.5. So if we are risking here 10 pips, so our target in this case here will be 15 pips. You see this trade was a winner, and this is the point where we hit the market. Here we're in that trade and we get another signal here for a sell trade, and this meets our criteria because price is below this exponential moving average. So we take this trade, and this trade was also a winner. Here is a buy opportunity from the market. You see from this point, this is the point when we get the cross. At this point the moving averages were below the 200, but from here we have a cross of the 50 above the 200, haven't crossed already the 100 EMA, and here the 100 EMA crossed the 200 EMA. So this is the point when we get moving from downward trend to upward trend. So from here we are only looking for opportunity to buy the market. So if you look, you will see that we check the oscillator here. The oscillator is giving us opportunity to buy the market, and this is the candle which is above all the moving averages. We open our buy trade, and this trade was against us, and here we were stopped out. But here we have another signal here, and the price closed between the 50 exponential moving average and 100 exponential moving average. So in this case, we open our buy trade, and our stop loss is at this 200 because it's the next exponential moving average close to 100. So our target is 1 to 1.5, and this trade was also a winner. If you see at this point, you can see that the 50 is trading below 100, so there is no clear direction. This will also help you to filter out a lot of false signal from the market. You see within this region, there is a conflicting between the exponential moving averages. So because here, from this point, you see the 50 was crisscrossing the 100, and here it crossed the 200, but 100 was still above, so there is no direction. From this point, we have again another clear spread from the 3 exponential moving averages, and here we get a signal at this point that we should buy the market. And if you look from here, the price is currently above the exponential moving averages, so we take this opportunity. So this is how I believe you understand how you are going to use this trading strategy. It's very simple and very easy. You just have to follow it. Make sure that first you have all the criteria met. Okay, get your direction. Once you have your direction, then use the oscillator to filter out where you are going to take your trade, and you should be able to take a good trade and be able to make money from the market. I hope you like what we are sharing. Please try to support us by subscribing if you have not subscribed, and help us to like and share the videos so that other people will get to see the content and also benefit from it. I wish you happy trading. See you next time.